Okay, good day everyone. BTCUSD top to bottom analysis. We're still on the daily time frame, but as we do our real price study, we'll finally go down to some lower time frames where we can actually take trades. So, real price study. But before we get to real price study, this is the fifth video on our series. On the first video, we identified our weekly zones and our daily zones. On the second video, we identified our weekly trend lines and our daily trend lines. On the third video, we identified our trend origin, and on the fourth video, we drew our market structure. So now we're going to do some real price study, which is where we actually define some trades. Oh, I actually missed some here. These are actually part of my market structure. I said, yeah, these are actually part of my market structure. I didn't draw them. These are actually part of my market structure. Okay. So. Real price study. So what is real price study? Real price study is the study of the cyclical or repetitive nature of price in order to predict future price movements. What does that mean? Real price study is the study of the cyclical or repetitive nature of price in order to predict price movements. So let me draw just a basic market structure template. You can see we have an impulsive move, a correctional move, an impulsive move, a correctional followed by an impulsive move. So when we see an impulsive move, that's what we expect. Because whenever price shows an impulsive move, after us be a correctional move. After a correctional move, there will be an impulsive move. So when we're currently an impulsive move, we're expecting a correctional move next. And when we are currently in a correctional move, we're expecting an impulsive move next. Another way to describe this is, imagine if somebody said, imagine if we were making a bet with someone and we're like, would there be night? Will night come today? Or will the sun rise tomorrow? It's like, that's like, I don't really bet, so I don't know the odds anyways, but that's like a sure bet now. Who doesn't know that the sun will rise tomorrow? Who doesn't know that the sun will set today and then night will come? When there's day, there's night, and when there's night, there will be day. After night is day, and after day is night. After day is night, and after night is day. It's cyclical, it's repetitive. So we know. So once we see one, we know that the other is coming. Once we see the other, we know that the one is coming. It's exactly the same with price action. Once we see an impulsive move, we know a correctional is coming. Once we see a correctional, we know an impulsive is coming. And just like that, just like that, just like that, just like that. So now, the whole essence of a forex trader is to be able to predict that. Is to be able to not predict it, but to be able to study it, understand it, and then take advantage of it. Alright, explanations out of the way. Let's do some actual analysis. So this is our market structure. We have a bearish impulsive, correctional, impulsive, correctional, impulsive, correctional, followed by an impulsive, and then we're currently in a correctional move. So price is currently in a correctional phase, at least based on market structure, meaning that we should be expecting a new impulsive move soon. So what we're going to do, we're going to come here. We're going to identify all our previous correctional moves in the past. We're going to circle them with a blue box, and then we'll go down to the lower time frames so we can look at them in more detail to see if there are any common patterns that appear, be it price action patterns, candlestick patterns, chart patterns, or maybe even just specific kinds of price movements, maybe ranges, particular kinds of zones. We're looking for anything common that appears between these three regions. And if we can spot something common among all of these three regions, or at least two of these three regions, then we can make a trade if we can see it in the next place. So let's go. I don't want this video to be too long, but real price study is always the longest video in the series because, for very obvious reasons. Real price study is just something that you can't really shorten because it requires you to go and look again and look again and look again. In fact, if you're going to do some real price study, it's probably better that you do it over and over and over again. At least do the real price study on like 3 separate occasions. So there may be something you didn't notice before, you notice it again. So what we have is an impulsive, followed by a correctional, followed by an impulsive. We have a very simple trending correctional move here. What we have here is, you can see a W pattern like this. You can even see a smaller W pattern here like this. And then price goes up. But then we can now see an M pattern, alternative bearish and engulfing candlestick patterns. Then it goes like this, like this. Okay, so that's a little bit confusing. So let me differentiate. We have W pattern here and W pattern here. Let's make the color a little bit lighter for this one. Now we now have an M pattern here and the price comes down like this to retest that level. Let's make this one notably darker. So this is what we have. We have a W pattern that was followed up by an M pattern. It actually falls along one of my rules of trading gold. When you're in a bearish trend, the W is usually only about as strong as its own size. So one isn't even up to. So now in the third correctional move, what do we see? I see a range. I see a range. Let's trace it a bit first. Impulsive, correctional, impulsive, correctional. No, it's an impulsive. I think this is an impulsive. Let's see. Okay, it looks a lot like a range, but price actually looks a lot like a range. But price is actually in a, let me draw it again to make it. So we have an impulsive here, correction out here, impulsive here, correction out here, and then an impulsive all the way here. But this could also fit into a range like this. This also fits into a range like this because these two are very, very close together. The two lows are very close together, so it also fits into a range. So should we take this as a range? Take it as a impulsive correctional? Well, you can take it as both actually. There's no reason to choose one or the other. But now let's see. Because in price, what we have in our recent price action is something that actually resembles a range. So I'm curious if what we have is similar to what just happened, which is a range that looks, which is a trending correctional that looks like it's in a range. Look at this. Okay, impulsive correctional, impulsive. This looks like a break of structure. It looks like a break of structure, but if you zoom in, let's zoom in. If you zoom in, you'll notice one thing. Okay, let me do this to make it very, very clear to you. Let me do this to make it very, very, very clear. What do you notice? Notice that the wicks do not go below this range. This red line I just drew here is what would be our higher low, so to say. And notice that the wicks, the candlestick bodies do not go below this level. Only the wicks go below this level, which means that this level has actually remained intact. So that means that the trend has not ended and is in fact still continuing. So let's come like this. So then we'll continue this, which goes like this. This is an equal low followed by another high. So what should we be expecting? Is there anything that looks like a range here? These 2 points can almost be considered a range, but one is notably higher than the other. But it has the greatest similarity to what happened here among all of our previous price action. This is where there is the greatest similarity. But even though it's the greatest similarity, it's not as similar. It is nowhere near as similar as I would wish for it to be in order for me to be taking a trade off of this. So that means that, well, price action is just being very erratic right now, so I can't actually say. So BTCUSD, no trade for now. No trade for now. Although no trade for now.